Hey, welcome to the Mario Dattilo Show. I'm your host, Mario Dattilo. I've been investing in mobile home parks and other commercial real estate for years. And on this show, we interview some really interesting and successful real estate investors and business owners. We go behind the scenes on how they do what they do. I know you're going to get a ton of value out of this, so stick around till the end. Hey guys, super excited. I've got a good friend, Dimitri Van Camp, on with me today. And I promise you, this is going to be an awesome discussion that you want to stick around for, because Dimitri not only has been a friend of mine for quite a long time, but he's got a very unique way of doing business, a different angle than a lot of people in his space are doing. And he's really amassed quite a bit of wealth doing it. And he is going to be able to go inside behind the scenes and tell us kind of what he's doing, how he's doing it. And we're going to talk negotiating. We're going to talk wholesaling. We're going to talk commercial real estate, residential real estate, you name it. This dude's smart. He not only covers real estate as a expertise, but he also understands several other asset classes very well. And him and I have done quite a bit of business together too. So stick around because we're going to have some fun. So Dimitri, hey man, thank you so much for getting on. This is fun. I forgot to mention the most important part, and that is you're not even in the United States. You're in Belgium investing in real estate in the United States. So, hey, thanks for hopping on, man.
Well, thanks for having me. I'm looking forward to the conversation. And yeah, I'm in Belgium right now. I'm in a small city in Belgium, and in a street which Americans probably would have a hard time pronouncing. But it shouldn't stop anyone from doing business in the United States, because it's a very open market. So that's, I guess, what we're going to talk about today.
Heck yeah! All right, so. Another expertise of Dimitri's is tax law, which is kind of cool. So let's just dive into this a little bit. I mean, you're about my age. You're in your 30s. You're in Belgium. You decide that you want to start investing in real estate in your late 20s, right? How does all that kind of play out? How does Dimitri go from whatever he was doing before to start investing in real estate? And where are you at right now? What are you doing now?
Right. Well, I don't know how far you want me to go back, but basically when I was at university, I was studying engineering, and I was looking at a chart one day of the salaries that you could make as an engineer. And especially with the income tax being very high in Belgium, I was like, man, that's just not going to cut it. So when I was in my fourth year, I started reading books about personal finance and things like that. And most of those books were actually they were written by Americans. And so in the United States, there is a very big industry, a teaching industry about finance and several subjects within finance, which we didn't really have in Belgium or in Europe in general. It's less of a market here. So I started reading about it, and that's how I got into real estate in the United States, by reading books. And that's how I went to seminars. I first, stumbled around a little bit. I remember reading a book one day about real estate options. That was actually the title of the book. And I took that book to an attorney in Belgium. And I was like, this is what I want to do, but I want to do it in Belgium. And then, which I did with moderate success. I did it. I did a couple of deals. Then I started partnering with someone to do deals in Belgium, to get capital to go to the United States. And we successfully, flipped a few dozen houses in Belgium. And then I took my bags, I went to the United States, and then, I stumbled around a little bit in the beginning as well. And then I did one deal, another deal. And then in the last few years, it really started to accelerate in terms of the volume that I started doing, which is probably kind of congruent with the general knowledge that you have to do something for something like 10,000 hours before you become really good at it. So that's where I'm at right now, where you kind of feel like it's easy now. It's not really easy, but you become competent in it, so it feels easy. So that's basically, and this spans, by the way, like a 10-year period. So just to make sure, this is not like 6 months or something. This is like 10 years. So
what I love about your story is you are in Belgium. Okay. You grew up there, you live there, you've been in Europe your whole life. You say, you know what?
Right.
I want to make something of myself. I want to go out. I don't want to have this 9 to 5 job. I don't want to go work for somebody else and make this weak income. I want to get wealthy. So you start reading up and you go outside your comfort zone, probably looking at, reading books that are outside of Belgium, American books. And you say, you know what, I want to start investing in real estate. So you actually come to the United States and attended some seminars, some courses. I know that's where him and I met. Dimitri and I met in Orlando. What year was that?
2013 in January.
So we're going on 10 years next year of knowing each other. Yeah. That's crazy how fast the time has gone. But so him and I both met and in Orlando because we were both learning about buying apartment buildings. And so, I mean, going back, that was Dave Lindahl's course. And I just remember Dimitri being super aggressive, super motivated. And he was unique because he was from another country. Nobody else was from Belgium there. So it was just, it was pretty cool. We actually hung out quite a bit on that trip. And ever since, we've been friends and been working on deals and stuff together. So now let's talk about what you're doing now. You're wholesaling homes and lots in Florida from Belgium.
Correct.
And what's interesting about this is I've heard a lot of people talk about, they're having a hard time finding deals. They're having a hard time, getting appointments set up to go look at houses and meet with sellers and all this stuff. Mm-hmm. And, I just want to point out that it's not like Dimitri has the luxury of going and meeting with the owner on every single transaction. No. He actually never sees homes and properties, and it's kind of a running joke that we have going that we don't want to look at property, right? So Dimitri, maybe can you just kind of talk a little bit about high level how you're able to do these transactions, wholesale single family homes at very high volumes without ever seeing the property?
Yep. So I want to straighten out something that you said at first, that a lot of people are saying like there's no deals. And I've been hearing that forever in the United States. If you go to like a RIA or something, there's always these people, and I'm not making fun of them, but they attend every meeting, they read all the books, and then when it comes time to do the difficult things, they're like, but there's no deals now. This is the point in the market where every property is going above asking price, and there's just no deals. And then you tell them, but I got a duplex worth 300,000. I got it last week for 180, and I wholesaled it for 220. I made 40,000 on it. And then they look at you like, are you? Is this real? Or so the first thing people really have to do is understand, if you're in the United States, there is an endless amount of deals. Now, 100%. That's not to say only one out of 50 to 1 out of 100 people that are actually going to sell are going to sell at wholesale price. So it's similar to when you have a pawn shop. Like, a lot of people that walk in, they're not going to be your customer because they're going to want too much money for their used TV or for their whatever. So a small percentage of the people that are selling are going to be your customer, but you're in a country with over 300 million people. Do you know what? That's in a few years, it's probably close to 500 million people. Like, there is like one house for every 2 people in the United States. So there's roughly like 100 million houses or something in the United States. And then that's not to talk about all the vacant land. Like in Florida, there is, I think, about 2 million vacant lots.
Jeez.
In one state. And so so get that in your head first. There's an abundance. There's no shortage on things. So, because the problem is, if you start with that, if you start with the approach that there are not many deals, you're already behind because you're already weak. And when you start talking with people, they're going to feel that you're operating from weakness, which we're going to talk about maybe a little bit later when we talk about negotiating. But so you have to start from I have people sometimes and they start haggling, and I just tell them, look, I can buy it at this price. If you don't like it, then that's okay. No hard feelings. I'm not interested. And people because a lot of times they just come back to you because they're like, wow, he's really not begging me to do this deal, and they feel that you're certain about yourself. And so you have to start with the approach that there's an abundance. If you don't do that, you've already lost. So
Yeah.
um, so there's an absolute abundance. So that's the first thing I wanted to start with. So
Yeah, I think that's a great point, Dimitri. You're doing something from with a well, I wouldn't call it a disadvantage, but some would call it a disadvantage. You're not physically in the country. You had to learn not only a language, but you also had to learn culture. You have to learn technology here in the
true.
United States, how things there's a lot of complexity. So the fact that you're doing it at the volume that you're doing it at, and you still had all those other hurdles you had to get over, there's really no excuse for anybody here to not be able to do it at whatever volume they want to do it. So your mindset, Dimitri's mindset, is definitely of abundance. It's definitely on, hey, look, this is what I can pay, this is what I can do. I agree, we are going to talk about negotiating, because I think Dimitri is probably one of the best negotiators I know, and he's very solid negotiator, and I love his strategies. And he's fair too, which is kind of rare. So typically when you get very aggressive negotiators, they're not fair with people, and he is. So let's talk about this a little bit further. You've got a deal that you're talking to an owner on. Okay, you do your different marketing strategies. You get an owner on the phone, and they say, "Hey, come over, sit down with me. Let's talk about the house." What's your response to them? Just curious.
Well, Mr. Seller, we don't go out to properties before we know that there's some type of a commitment, because we don't want to be driving around. If we would drive to every house where people would call us for, then we would be driving around all day. And it's not to say I'm interested. I'm absolutely interested, 100%. I just want to make sure that there's a reason for me to come to the house.
Yeah. And
So
so
maybe you can tell me a little bit about the condition. We can go into that, about the condition, and then we can see if it's something that would be of interest to us.
and notice, he's not making it a big deal that he's not able to get there. He's not going to hop on a plane. He never mentioned, well, I can't, but he's basically making it a qualifying statement. It is a qualifying discussion, like, hey, let's just make sure this is a good fit before I come over there. And I think really confidence and everything definitely comes into play when you're talking to them. It's, do you want it? Is it a good fit? And you don't want to waste their time or yours. So so just to be clear, for those who are listening that, want to understand what Dimitri does, he's wholesaling single family homes and vacant land in the United States. And what that really means is that he's going and sourcing, sellers who need to sell, and they're more interested in a clean sale, a fast sale, a quiet sale than necessarily getting full retail price for it. And so he goes in, makes it convenient for them, makes it a smooth transaction that they can be confident in. And then what he does is he gets it tied up under contract, and then he sells that contract on the back end to another buyer. And I know a lot of people already know that listening to this, but I just want to make sure, maybe you got some entrepreneurs in here that are more focused on other businesses other than real estate. He's essentially selling contracts on real estate and doing it at pretty high volume. So, Dimitri, what's the hardest thing that you have to kind of get over or deal with when you're dealing with people in another country other than yours? I mean, like, what's that one kind of hurdle you're like, this is kind of annoying?
Yeah, well, sometimes, people might say something about your accent, and they're like, what language are you speaking? Because you talk with an accent or something like that. But that's okay, because they're typically not going to sell to you anyways. I've had it one time where one guy told me, like, what language are you speaking? And then he called me back. He said, wait, I heard you say at the end something about that vacant lot. I want to sell it. And actually ended up wholesaling. And then he apologized. He was like, sorry, man, I just get so many calls from people. But I think there's not really that many hurdles. Like, obviously there's a little bit of an adaptation to the culture, in terms of, like, I mean, the first time when a lady told me, like, do you know what I'm saying? I was like, yes, ma'am, I hear you loud and clearly. We have a good connection on the phone. I hear what you're saying. So there's kind of some things where people say something, it's like a rhetorical thing that they're saying, and you kind of answer it, which is not, you're not supposed to do that. But But besides that, I think the biggest hurdle is really in people's heads. Really, I've noticed this, like even to some extent, the fact that we're talking about like wow, how are you doing this from outside the country? Well, it's not really different if you're doing a deal in let's say in Cape Coral in Florida, if you're doing that deal from Belgium, or you're just in Orlando and it's too far, you don't want to make the 3 hour drive. It's the same thing. There's no difference. Like, if anyone can explain the difference to me, I don't think there is any difference. In both cases, you're not going there. So, and that's why I'm doing a lot of vacant lands. I have 5 contracts to be signed today. I have five properties in escrow, all vacant land, and
Nice.
they're obviously much better than houses, in the sense that houses do give some complexities, in terms of someone at one point has to go to the house and take a look at the condition, whether it's someone who's just taking pictures for you, or someone who is the cash buyer, or a realtor, or however you want to organize it. You don't have that with vacant land, so you can do a
It's more
very
of
high
a
amount.
it's more of a commodity trade than anything, right? I mean, it's just it's they're other than the acreage and kind of whether it's got public or private utilities, it's pretty much just a widget for the most part, right?
It's a widget, and a lot of times, one other thing I want to talk about is a lot of people have the misconception that you need to know everything about a house or a lot. And I'm not saying that you don't have to be educated, but what I'm saying is there's this concept which I try to explain to people a lot of times and they don't understand it. It's in the price. It's in the price. And if I can explain that a little bit for a
Yeah,
second.
go
So,
for it, man. That's super good.
so if you have, let's say you have two vacant lots or two houses and they're right next to each other, right? And one of them you want to buy and the other one just sold. So you have a good comparable sale. Well, the one that sold, let's say it's sold for 100,000. Well, it's simple mathematics. So if you get yours for 70 and you sell it for 80, or you get it for 50 and you sell it for 70 or whatever, you make that spread, right? Which is the goal of wholesaling. That's what we're talking about right now, is specifically wholesaling. Well, a lot of people will say, yeah, but in that street, the school district is not that great. Well, that's in the price. So if the school district was great, that $100,000 lot would be 150 or 140 or 160. So it's in the price. Or someone might say, yeah, but in that street, you don't have city water and sewer. You have like septic. It's in the price. Everything is in the price. So the value of the real estate, what it's selling for right there, it reflects all those fundamentals, whether they're good or bad. And so if you're just doing a transaction where you're buying and selling, it is not that important. Even if you're taking title, it's not that important to know about the school district, or it's a long drive to this city, and then it's a 1 hour drive. It's in the price. If it was a 20-minute drive and everything was the same, I'm sure the lot would be double. So all those things are in the price, and that's important to understand, because if you don't understand that, then you're going into a new market. Because I do business in about a dozen different counties, and if you think you have to know everything about every street in every county, you're gonna paralyze, and you're never gonna do business. And so just look at what it's selling for and how much you get it for under contract, and then make the spreads. Now, I'm not saying that's the same thing if you're buying and holding property. That's not the same thing.
That's
we're not
different,
talking about
right?
we're not talking about that right here. If you're buying and holding, and especially if you're going to live in it, you want to know everything about the school district, or you want to know everything about all the details. So, and also if you're buying and holding, you need to know how things are evolving, which is an entire different story. We're not talking about that today.
I'm glad you clarified that, Dimitri, because we are talking about a trading model, not an
Yes,
investment model for long term. And that would, you're right, totally different
yes,
game
and
plan
and
there.
and this model is actually, you can use that to create the cash to buy the assets that you do want to hold on to. And that's one other thing, by the way. A lot of times I see people passing on deals because they're like, I don't like this duplex because whatever, the city water and sewer is this or that. Well, wholesale it. You can get it under contract. Don't worry about those things. Get it for much less than it's worth. And once you've done that, you can decide what you're going to do with it. You can wholesale it, you can buy it and hold it, you can pay cash for it and refinance or whatever you want to do. You know, all these games you can play in the United States with real estate, you can decide that from that point what you're going to do with it. So
and that Dimitri, you brought up a great point. One of the main things that I think people can get out of this discussion is somebody who's got, you know, maybe some rentals and a full-time job. They might be thinking, well, what does wholesaling have anything to do with what I'm trying to do? And I think you hit it on the head. This allows you to generate large amounts of cash to then reinvest into other cash flowing assets. And it's a moneymaker. Yes, it is a job. You do have to continue to find widgets to flip, but the point is you're getting large chunks of cash. You're not going to get that much money from the cash flow of property as you will from large, you know, transactions like this. And so you're positioning yourself to build up your capital to then go reinvest into other things. So that, and, you know, everything you're talking about also applies to commercial real estate. We've got a lot of commercial real estate investors that listen to this. And, you know, for me, I'd rather tie up the mobile home park or the self-storage facility or whatever I'm looking at, and determine if it's something that I want to move forward on. You're not going to do all your due diligence up front. So often what I see people do, though, is they tie up that property, they do a little bit of due diligence, they quickly figure out that it's not a fit, and they just cancel. When all they had to do was put it out to their network of people who are already investing in that asset class, and they can sell that contract and make some money on it. So it's the same thing, whether it's residential or commercial.
Yeah, if you call me tomorrow, you say, Dimitri, do you buy gas stations? Yeah, absolutely, I do. Do you buy cemeteries? Yeah, absolutely.
Buy everything.
But the first thing I will ask you is, do you own one and do you want to sell it? Why? What's your situation? And then I listen. And so if I hear that maybe you got a gas station for sale, and I figure, like, you know, some things you can figure out pretty quickly, like if it's selling, if your asking price is way below the tax value, and it's or you can quickly do a calculation on the cash flow, and you see you're getting it at, you're selling it to me at a 10 cap rate or something, then you know you're getting an extremely good deal, and then you want to go deeper into it. But I mean, it all starts with the motivation of the seller, which a lot of times in commercial real estate, you're dealing with a different client base than someone who's selling like a vacant lot they inherited from their auntie, and it's now worth 50 and they just want to get rid of it. It's a different client base, but there's similarities, obviously, because in the commercial space, you also meet people there, maybe in a 1031 exchange, which, I mean, I'm sure most people know what that is, where you're basically you're trading up a property and deferring the taxes, and they need to sell something because the thing that they're buying requires additional funds or something like that. So there's always situations where people might be motivated, even if it's not motivated in the sense that, you know, they need money for the rent of next month or something. So,
well,
I mean, there's different types of motivation.
You're very right about that. I mean, the motivation may be different, but there's often a motivation behind the scenes that's happening. And although on the commercial real estate side, a lot of times the sellers are a little bit more, you know, close to the vest on what their motivations are, because they're sophisticated negotiators, but that doesn't mean that there's not something behind the scenes pushing them to sell that. It can be divorce, it can be death, it can be all kinds of different things. Like you said, they need to free up capital to go do something else, and they're willing to take a discount because it's a clean, fast sale.
Yeah, I mean, look, motivation doesn't have to do necessarily with you're not smart, and because of that you're motivated. Like, if I need to leave the country tomorrow, I'll sell my car at you know, a third less of what I owe on it, or what I bought it for. I mean, because I'll be fine with that, because you know, I need to get rid of it, right?
Speed.
So that might not be my creation. So I think the difference is, if you're dealing with someone who is a good negotiator, they will not show their hands as easily. That's the difference. They'll be like, yeah, maybe I'll sell it, but they know they're going to sell it within the next 7 days. So that's just a big difference. And a good negotiator is typically someone who is not putting all their cards on the table. I don't know if you want to go into
let's talk negotiations. Dimitri's chomping at the bit. He wants to talk negotiations, and I want him to too, because I got my notepad and pen right here, ready to take some notes, because this dude's good. So Dimitri, what can we talk about on the negotiation side that people are going to leave like just, you know, learning a lot?
So a lot of things. I've read a lot of books on these things, and I've done like maybe 400 or 500 real estate transactions by now, and so I've learned both from the books and from doing. And I spend a lot of time thinking about all these things. So I'm just going to share my conclusions with you. So there's one very, very big rule that it's my main rule when I'm negotiating. And I've never actually read about this rule, but it's basically something I just came up with in a few months ago. Whenever you're negotiating, you always gotta be talking to the other person from a position of strength. I know it's very general, it's super general, but you see it in a lot of situations where you start talking with a seller and immediately they take control of the conversation. They take control of what you gotta tell them. Who are you? What company are you with? What's Mario? What's your real estate license? What's your real estate license numbers? And so they start asking you all these questions, and you're losing control of the situation. And once that happens, you're better off almost of blowing up the situation. And what I mean with that is, okay, you don't gotta blow it up every time someone asks you a question. That's not what I mean. But when they start to take the upper hand too much, and they start asking you almost unreasonable questions. Like sometimes people ask me like, "Where do you live?" I'm like, I'm not gonna tell you where I live. Like, so when people do that, they're trying to take the upper hand, and then what you gotta do is you gotta take control again. And the way you do that is by reflecting with a question to them. So if somebody asks you, where do you live? You could say, well, I live in Cape Coral, but why would you ask me that? What do you mean? And so you don't want to be rude or something, but if they're at that moment, you will see if they were just asking a question or if they were trying to take the upper hand and controlling everything. And if they're in a situation where they try to take the upper hand and control everything, and now you get to the general rule again, you're in a weakness, you're dealing from weakness, well, then you're losing and you're not going to get a deal. Because if they take the upper hand too much, it's like they're unreasonable. And if they're unreasonable, they're not going to give you a good deal anyways. So, but you feel this always in different types of situations where sellers, they tell you like, okay, on the agreement, change this, and this. And you got to agree to everything or I don't do it. Well, probably the deal is not going to work out, because it's very likely that you're dealing with someone who is, and I've had this many times before, they might, a few days before closing, they might come with more concessions and more concessions. So what you want to do each time something like that happens, if they come with, I want this and this and this in the agreement, then you're like, okay, but you hit them back with the concession. So that's okay, but then it's reasonable that I take this and this and this in, or I put this and this and this into the agreement, right? That sounds
fair. You don't
fair,
give anything away for free.
Yeah, and so, but the general rule is you always want to be dealing with you always want to stay in a position of strength, and that starts with the basic conversation, where you keep control of the conversation. Once it goes off the rails, and you're just sitting there answering all the questions of the seller, like, okay, I live here, and this is my real estate license number, and no, I had no complaints against me filed, and this and that, and you've lost. So you got to take control and keep control of the situation in a balanced way. You want to be reasonable. But
how do you do that without being a jerk, Dimitri? How do you do that without just being a straight up jerk the whole conversation and trying to like be overly aggressive with them?
Yeah, sometimes it's hard, and you got to feel it out. So after a few minutes, you typically know who you're dealing with. But how are you not? Well, you're just friendly and polite. But you don't you can refuse to answer a question in a polite way. You don't have to say, you never want to have a collision. That's something that's never necessary. Even if you're blowing up the situation, you rather just blow it up or reflect it back to them by asking them another question or asking them in a friendly way, like, why is this important to you? You don't have to collide with them. But you typically, if they start asking you a lot of unreasonable questions, you reflect it back to them. That's the whole point. And if they start refusing, you reflecting the questions back to them with another question, then it's not going to work.
Yeah. You
Then
can
the
kind
deal,
of gauge, you can tell that they're not in a deal making mood. They're wanting to control the situation, and it's probably
yes,
not going to be terms that you're comfortable with, or they're just
yeah,
wasting your time.
exactly, exactly.
So in that
Yeah,
situation, I mean, somebody's coming at you from a standpoint of kind of more aggressive, and you have to kind of blow the deal up, like you said.
yeah, that's okay.
Do you follow up again then, or how does that, or is that
No,
normally just a dead deal?
no, I never follow up with a deal like that. The only things I follow up with is if people from the beginning sounded motivated, and then you made an offer and maybe they don't respond, or they don't respond, or they refused your offer or something like that, then you want to keep following up, and then you want to keep following up like forever until they tell you stop calling me, or it's already sold, or I closed with someone else or something like that. I've had my best deals come from where someone said, okay, I'll sell to you for that price, and then you send them the contract through DocuSign. They never sign it, they never respond, and I follow up twice a day. So I do that. I might skip a day when I take a day
You
off, but
stalker.
yeah, but you have to. You
Of
have to.
course.
So you you call them twice a day, and I might call them like 6 days in a row, twice a day, and then after the 6th day, they might pick up and they're like, "Yeah, the reason why I didn't call you back," and they immediately start apologizing. Like they pick up and they're like, "I'm sorry, I didn't pick up for a few days, but I just wanted to make sure that I was ready to sell, and I'm ready now." Or they might also say, yeah, sorry, I didn't pick up, but my brother-in-law told me the property is actually worth 6 times what you were offering. And that's probably then not true. The brother-in-law is probably not, he's probably overestimating it, but that's okay as well. So
So how do you
you
handle that? They say, "Hey, I think my property's worth a lot more." I mean, is it cool? Call me when you're ready to sell then, or is it more like, well, the reason that I feel like the reason that it's not 6 times, and what's kind of the response to something
okay.
like that? Because I think we
Okay,
get that a
so
lot in this market.
right, right. So the first thing I want to point out is there's a difference between an objection and a complaint, and you got to make sure you don't confuse the two, because a complaint is, and I've had many complaints. I don't mean complaints against me, but complaints in the sense that people get to closing and you call them on the phone and they're like, man, I really just don't want to sell this lot for 20,000. I mean, I feel like it's worth more, and it's just a low price, $20,000. And they might say that. I'm not assuming it's an objection, because if you assume it's an objection, you start to adjust something maybe that you shouldn't adjust. So in other words, if somebody tells you, wow, Mario, the price that you're offering is low, it's ridiculous, then you tell them, I agree. It's ridiculous. Yeah, I agree. I agree.
I know it's
I
so
agree.
low. I'm so cheap.
I agree. I agree. It's ridiculous. Like, I sold my car the other day to the dealership. The price they paid me, it was ridiculous. I felt it was ridiculous. But then at the same time, I realized I did the deal with them. It was done. I had my money right away. I didn't have to pay any fees or commissions. And that's a completely different price than selling it for retail and going through a lot of hassles. That sounds fair, doesn't it? And then
It's
they
the
might be like,
uh, feel found. Wait, feel felt found, or what is that?
I know how you feel. I felt the
Yep,
same way. But what I found is when I sold it, that's what we got from a course that we took together in the Dave Lindahl course.
that's right.
But that's absolutely the feel, felt, found. I know how you feel. I felt the same way. And what I found is, and that's a very important thing to do, because you're showing that you have empathy with them and you have similarities with them. Um, but
Well, they're calling you cheap.
while they're calling you cheap.
Yeah.
But you don't want to assume it's an objection. You want to assume it's a complaint, because if a seller gets close to the closing and you're on the phone with them for one last time and they're like, I'm going to send the closing documents in, but I just feel that price is just too low. And then you tell them, I agree. It's too low, because they haven't said they're not going to sell to you at that price. They haven't said that. So that's the first thing. You assume it's a complaint, not an objection. If it's an objection, then you start talking about, then you can put in the feel, felt, found. I know how you feel. I felt the same way when I sold my car. What I found is that it's actually worth something, to have an easy transaction that's fast, where I don't pay any fees or commission. And then what, at that same point, what you do, you push them away, which I know sounds weird, but at that point you gotta push them away. And you might say, Mr. Seller, maybe this, and I'm not saying the day before closing, but I'm saying in the initial
Right.
negotiations, if this happens, right? But the day before closing, you tell them like, look, we already wired in the money. So, I mean, you want to push them to closing, of course, but when you're in the initial negotiations, and you might push them away a few times, because you might tell them like, look, this might not be for you, because I don't know what's important for you as a seller. For some people, it's important that they have a fast and a clean sale, which doesn't mean, I understand, you don't want to give it away. Nobody wants that to do that. But it might not be worth it for you to to sell at a discount and to have a very clean and fast and easy sale. Maybe you just want to hire a real estate agent and you can put it on the market. And after a few months, maybe you can lower the price one or twice. And maybe you'll definitely get a higher price if you do that, by the way, Mr. Seller. But it might take you 6, 8, 10 months. And maybe you need to change the realtor once or twice. That's okay. I don't know what's your situation. If you have all the time in the world and you just want to see and how the market reacts to your to listing your property, maybe you just want to get a real estate agent. That might be better for you.
See,
And then
you're giving them all the pain points and with a smile. You're like, yeah, but you can do that. That's perfect. You can wait 10 months. Like you can fire 3 agents. You know all the pain points because you know their motivation. Yeah. And so you're giving it to them. You're giving them, you're pointing out the value that you provide. Yeah, exactly. They're paying for it in a bit of a discount, but you're kind of reminding them of why they want to sell to you.
Well, it's also true,
away.
Right? Yeah. And it's also true, right? And what you're doing what's called takeaway, where you're taking away the possibility of you buying it. And then that puts them in an emotional state where they feel like, wow, maybe I am going to have to put it on the market for a year before I sell it, which might be true, by the way. You don't know. Or the market might turn down or whatever. You might have all kinds of situations where the sale is not a certainty. So you definitely want to push them away. The moment to do that is whenever they start to put you in a situation where they want you to up your price, or they want you to give them all kinds of concessions, or when they want to make it look weird that you're not paying the full retail value for it. Because some people, they might say, my lot is worth 50,000, so I want you to buy it for 50,000 and close in 2 weeks and pay all the closing costs and not take the time to do a survey and all those things. And then you have to explain to them, I'm sorry, this is not, you can't drive your car into what's that place called, CarMax, and get full retail. Like, I mean, that doesn't, the world doesn't work like that. It's you have 3 things. You have speed, convenience, and price, right? You can only get 2 of the 3. I heard someone say that one time, and it's very true.
That's so true.
Yeah,
one thing. Go ahead.
Speed and convenience. Speed and convenience is when you sell to a cash buyer or a wholesaler or something.
You give up price for it.
You give up price for it, yes.
Well, and what's interesting too is when you're telling someone, when you're doing that subtle takeaway, you're kind of agreeing with them. Hey, it's cool if you don't want to sell to me. You can do all this other stuff, and these are the pain points you're going to feel in response to not, to getting a higher price. You're also going to feel these pain points, but you're also ready to walk away. I mean, you have to.
I'm ready.
You can't do a takeaway and be willing, and then come back and be like, well, no, you need to be ready to walk away, and they have to feel that.
Yeah, absolutely. And that's why it's important what we said from the beginning, that you need to believe that there are a lot of deals in any asset class. And once you believe that, you get into a state of mind where you can do the takeaway, where you can walk away, and where you can talk with confidence. Because I get like 30 leads a day. So if somebody tells me like, Dimitri, I think I'm not interested in your price and whatever, that's okay. Good luck with selling the property. And can I go now? Because I have like a lot of other people wanting to talk to me. So I don't tell them that would be rude, but that's the mentality that I have. So yeah.
You have to be willing to walk away. And I've actually talked about this before, that if you feel like there's not enough, if you feel desperate to get a deal done, it's because you're not looking at enough deals. You don't have enough deal flow. You don't have enough lead
Yeah,
flow. And like you
absolutely.
said, the reason why you're willing to just be like, you know what, forget it. I don't care. There's background noise because I got a huge Florida thunderstorm going on. So
Okay.
ignore that if you hear that. But
I don't hear it.
yeah, you have to have enough lead flow to where you're picking out deals. You're picking and choosing deals. You're not desperate for deals. And as soon as you start to get that
Yeah.
feeling like I got to make this work, it's because you're not looking at enough deals. And
Yeah.
that's your solution, right? It builds confidence because you're just sorting through the ones that are going to work.
Yeah, you need a lot of deals. And I understand if somebody is working a full-time job and it might be a challenge to make sure you have a lot of leads and everything. But I, what I think happens a lot of times to people who are in real estate of any kind is they don't have a lot of lead flow. And so they're taking any leads and then they get into their car, they burn the fossil fuels and they drive all the way to the house.
I love that.
Distances in America are pretty big. So you spend 4 hours in a day driving all over the place and you go to three people who are absolutely not interested in your business. And you've just wasted a whole day. And in that day, you could have gotten like 30 leads and two of those might have been qualified, or one of those might have been qualified, and you might have done a deal without leaving your house. Your wife, when I work, my wife is in the other room. I love it, so if you leave your family, make sure you have a good reason to get out of the house. Don't get out of the house because somebody tells you on the phone like, if you want to make me an offer, then first come and see the house, then or first, I want you to take a picture of the lot so I know that you're serious. Okay, Mr. Seller, I think maybe you're not very serious, so I'm not going to make an offer on the lot. So, and
Yeah.
that comes back to what we also said. I'm talking from strength. I'm not talking from weakness.
Right.
So the dealing from strength is a mentality, but it's also the situation you put yourself in by having enough lead flow.
Yeah. If you're not afraid and operating in fear that you might not have the deal, the next deal coming down the pipeline, you, it's natural. You're going to try and force deals to work. And that's a recipe for failure because either you're going
Yeah.
to buy bad deals or you're going to waste a lot of time on things that you should have never wasted time on because they're going to fall apart anyway. So that's super good point, Dimitri.
Yeah.
Um, so, so what other things would you say kind of like strategies you use when negotiating with sellers that really give you the upper hand? I love that negotiating from strength. I love the feel, felt, found. What else? What
Takeaway.
are some other good nuggets?
Well, the takeaway, making sure
Takeaway
you
for
have enough,
sure.
make sure you have enough deal flow. Oh, also one other thing, you have to assume that everyone you talk to is gonna do a deal with you. And let me explain what I mean with that. So let's say I call you Mario, and I'm actually picking up the example of a deal that I did about a year ago on a duplex because I remember that deal very well, and I also cold called the person, so I remember the conversation. So if I call you and I assume that I'm gonna do a deal with you, in that situation, I called the person. I said, "Hi, I noticed you have a duplex on this street, on this address, and I'm actually interested in buying it. And I did some due diligence before I called you, and I was wondering if you have an interest in selling it." He said, "Yeah, I'm interested in selling it." He was 2 months away from tax foreclosure, by the way, which also is about putting yourself in a position of strength because that already puts me in a position of strength. You see how that general principle always comes back?
His
Um,
motivation.
yeah, yeah. So I asked him, "Do you want to sell?" And he said, "Yeah, I want to sell." He didn't know about the price or anything. He asked me, "What price do you want to sell it at?" I told him, "I'll sell it for 180. I'll buy it. Sorry, I'll buy it for 180." I said that with certainty. I assumed he was going to sell to me for 180. If you're going to assume that it's not going to work, and maybe you have a bunch of negative thoughts like, I'm doing these people a disservice by buying their property instead of I'm helping this guy because without me he would have zero and he might lose his personal home, maybe if he's in trouble or whatever. um, you assume that the deal is going to work. And you also understand that you're providing a service, because the problem is this: a lot of times your subconscious thoughts, they're going to reflect back into your tone of voice. They're going to reflect back in how you structure your sentence. They're going to
So
reflect
true.
back in many ways. So if I would have called him and I was not certain, I'm like, I don't know, like, you know, like 180, could you do 180? Probably not. I don't know. And if you're talking like that, of course he's going to say, yeah, no, 180, that's way too little. I'm not going to sell to you for 180. Um,
Exactly.
Whereas he might have sold to you for 180 if you say, yeah, two plexes like this, I buy them for 180. And that's with me covering all the closing costs and all the fees and everything. And then in 3 weeks from now, the deal is closed. So you would go to bed tonight knowing that it's a done deal.
Love it.
Sounds fair enough? And
Fair
then
enough.
and he told me after 2 minutes on the phone, he said, yeah, it's okay. That's
Yeah.
a rare that's a rare occasion, and that's also why I used that example, because it was a very simple, straightforward conversation. Most of the time you have to do some follow-up and all those things, but that's the main thing, is you want to make sure that you're in the mindset of assuming that the deal is going to go through. And if he tells you 180, are you crazy? Then you tell him like, oh, you're not selling it for 180 to me, huh? So you're shocked. You're shocked that they're
Yeah.
not doing business with you.
Equally shocked.
You're equally shocked. Yeah, you match their shock. So you assume that they're going to do business with you. It's like, it's with many parts of life. If you're just assuming that you're going to win, you're probably going to win. Like I heard Charlie Munger and Warren Buffett, I heard them, they repeat this one sentence the whole time, where they say, never underestimate the man who overestimates himself. And I think that's kind of a reflection of that,
I love
where
that.
you're kind of your mindset is really reflecting your actions, and also the way you talk and your tone of voice and all those other things. So
Yeah,
so
your
assume
mindset is what gets you over the finish line. It's what makes you successful. And so sometimes you have a little bit of overconfidence, but that can push you over the edge to get where you want to go. Where if you're
yeah,
constantly doubting yourself, you're constantly, thinking of the negative and what's not going to work, you end up uh showing that through your actions, your tone of voice, your body language, all of that stuff. It comes
absolutely,
through subconsciously. You're projecting that. And so the
absolutely,
results then come back, because of it. So
yeah,
I think that's
yeah,
a super good point. You got to go in with confidence. You got to go in with expectations of, I'm offering something good, and it's going to work. They
yeah,
like my price.
yeah.
So your surprise is actually legit when they
Yeah.
balk at your price. Like, huh? I thought I was offering you a good
Huh.
price. Huh.
Well,
All
that's my
right.
reaction if they say I'm not going to sell to you for that price. I'm like, huh. And oh, one other thing. Okay, there's two other things I want to talk about. When
Yeah.
there's two
It's
other
your
things I
show,
want
not mine. Take it.
to. If that's okay, I want to mention two other things. Um,
Absolutely.
so um, I forgot one, but um, okay. One other thing
That's
is
what you get for
okay.
trying to take my show.
Okay, no, I remember. So a lot of times, and most people know this when they're negotiating, like you should not do too much unnecessary talking. Because if a lot of times silence is power. So by not saying anything, the other person will often start talking, and by talking, they reveal their hand. It's a
That
little bit like,
uncomfortable silence pushes them to talk.
absolutely. Like that's also when you make an offer, stop talking, make the offer, and yeah, I would buy it for 180,000, and you stop talking,
And
and
that
then let them.
that discomfort makes them actually say things they maybe wouldn't have said if they were comfortable, right?
Exactly. So if you say I'll buy it for 180,000, and then they're like no, and then you start talking right away. Okay, I'm sorry, Mr. Seller. I apologize for about trying to buy it for 180,000, and you start talking and talking and talking. Well, if you would have not talked, maybe they would have said, "Are you crazy? I'll only sell it to you for 185." You're like, "Oh, I'm not sure if we can do that, but maybe." I can do something about the price. Let me check on that. I'll call you back tonight, and then maybe you buy it for 182, and you, instead of making 22,000, you'll make 20,000 on it. So that's also good. So don't talk. Um, if there's no advantage in talking, and especially don't talk when you've made an offer, and don't talk when the other person might start talking and reveal information to you, because silence is gonna lead them to start saying things that might have them show their hand to you.
Love it.
Yeah. And one other small thing is, don't give people concessions if they're not asking for it.
So
Like
so what you're saying is negotiate differently than you let me rephrase this. So in the beginning you talked about when somebody takes, make sure you take back. But
yeah,
if you
this is actually a little bit, yeah.
yeah, don't expect to give. And I like that.
Well, it's actually what I meant earlier with, if they ask for a concession, then hit them back with a concession to keep a balance of power.
Right.
But what I just mentioned about don't give them a concession unless they're asking for it, is try to wholesale a house to someone, and you say, they ask you, maybe you got it for 200, and you're trying to sell it to them for 240. And let's say the house is vacant, okay? And they go buy the house, and they send you a bunch of pictures. They're like, man, this house is really rough.
Yeah.
Well, a lot of people, what they're gonna say is, okay, I'll do 235. He's never told you he's not gonna buy it for 240. So don't start giving people concessions if they're not asking for it. Don't start giving away things if nobody's asking for it. So
It's like that negotiating against yourself thing, right?
You're negotiating against yourself at that point. So don't start giving people things if they're not specifically asking for it. I'm not saying if they ask for it, just give it to them, but if they're not asking for it, then don't give it to them, because a lot of times, especially when you're wholesaling, these cash buyers, they might be experienced, and so they might be like, ooh, did you see this picture I sent you about the hole in the ceiling? That's rough. That's rough. And so they're smart because from their side, they're not saying they're not going to buy it. They're just seeing if you will reduce the price automatically. And you have this situation in different shapes and forms. So just be aware of that. That's what I wanted to say.
So don't offer it unless don't even think about offering it until they start pushing for it, because you might be giving up something you didn't need to give up. That's good.
Exactly.
That's good. And again, that's that whole discomfort thing, right? Sometimes we get into a position in a negotiation where you feel uncomfortable, so you feel like you've got to step in and save the deal, when that's really not even what they might be hinting at it, but it's maybe not a big enough deal to actually kill the deal or to have to renegotiate, but they're testing the water. And so you can end up giving, and who knows, maybe they do come back and they say, well, because of that hole in the ceiling, I need $1,000 off or $2,000 off the price, when you would have maybe said, well, it's okay, I'll just give you $5,000 off and we'll make this all right. So you may have actually offered more than they were going to ask you for, but you don't know that because you jumped the gun and you got anxious, right?
Yeah, and that comes from fear, because you don't want to lose the deal.
Yeah.
But yeah,
it's all about that confidence and that boldness, because you've got other deals coming down the pipeline, you're working other stuff. In commercial real estate, that happens a bit because you spend so much money, doing due diligence on these deals. Like, I'm about to close on a deal right now, and I'm doing the math, and I'm like, whoa, we spent tens of thousands of dollars figuring out if this is something that we want to buy. That's a lot of money to lose if you end up canceling. So you can get that feeling very easily, like, crap, if I cancel this, I'm losing $30,000. How much is it worth to me? And of course, there is a little bit of mathematics behind the scenes to make sure that you're not walking on a deal over something small because you're worried about due diligence costs. But it's a matter of just saying, nope, I'm going all the way. This deal is going to happen. And yeah, it does you do maybe take some extra risks, but it's worth it because the deal's worth it ultimately. So
yeah,
I love that.
It's always a balancing act. I'm sure you rather lose 30,000 than overpaying by $2 million. So some situations, it's obviously very clear that what you want to do, but it's always a balancing act. So
It is. So let's talk a little bit about the market, Dimitri, and I want this to be kind of an evergreen discussion. So I don't want to get too granular on what interest rates were yesterday or something like that, because it may not be important. But 3 months from now, if somebody's listening to this, but generally speaking, it's May 3rd of 2022, and there's definitely been some sketchiness in the economy
Yeah.
since the first of the year, right? What's
Right.
kind of your vibe on buying real estate, knowing that there's maybe some lingering risk out there? And I know you're not shy about where you think the economy's going, but you know what should someone be thinking about if they're either just getting started, or thinking about getting started buying real estate kind of in today's economy?
Okay. So you're asking a very interesting and very complicated question, of course.
Yeah. Dimitri can go super in depth on this stuff. So I would say keep it at a level that we're going to follow you.
Yeah, we're not going to make this an economics discussion, but I want to talk about something a little bit different, which is payoff structure. Payoff structure. And what I mean with that, I know it's a little bit outside of the box, because you normally don't hear about this when you talk about real estate, but there's this author, Nassim Nicholas Taleb, and he actually wrote a book. It's called Anti-Fragile. And the concept of the book, I can paraphrase the concept of the book in 30 seconds. He basically explains that whenever you make like a financial decision, there are typical three typical payoff structures. One of them is fragile, the other one is robust, and the other one is anti-fragile, right? And when you talk about fragile, I mean, everybody knows what's fragile. It's like a glass, and it easily breaks. And whenever it breaks, you can't fix it anymore and things like that. Well, in real estate, you can also do a deal that's fragile. And and the reason why I'm bringing up these payoff structures, by the way, is I wouldn't focus as much about what the economy is going to do because nobody knows. I would rather focus on the payoff structures that you're getting yourself into. And so I would stay away from real estate transactions that are fragile. What's fragile? It's very fragile if you're buying a $200,000 house for 170 and you're financing 100% of it with hard money with at an 18% interest rate and 3 points at closing. If the market just drops
Right.
by 10%, like and you sit on it and it drops another 10%, you have negative equity. That's very fragile. What's also fragile? Getting yourself into a commercial, a piece of commercial real estate where the cap rate is 6% and the interest rate on the financing is 4.5%. You have almost no cash flow. The lender barely accepted it because your debt coverage ratio is actually kind of marginal, and you have to refinance it in 3 years.
That's a
Very
short
fragile.
wick, right?
That's very fragile. So I would tell people stay away from all the fragile stuff, especially at this point in the market, because in 2013, 2014, 15, 16, you could say, okay, I'm buying a property at one that's worth 200. I'm buying it for 170. Maybe you're financing it and things like that, and it'll probably go up a little bit and you resell it or whatever. I mean, I still wouldn't like to do it like that, but I could understand it. But in this market, I think I would stay away from anything that's fragile because you don't know what interest rates are going to be. Maybe they'll drop back. Maybe they'll be 10% in 2 years from now. So we don't know. So stay away from all the fragile stuff. The second payoff structure is robust. Robust is something that just doesn't really break, right? If you hit it, it will not break. It's a little bit like a wooden desk or something. You can hit it, it will just maybe worst case it'll bend a little bit, but you're not going to break it. That's what's the comparison, or what's the situation if you have something robust in real estate? I would say that's maybe you're buying a rental property, you're paying cash for it, or you're buying a good commercial deal and you get a fixed rate for 15 years and you're buying it with good financials. You have a good debt coverage ratio that's fairly high and things like that, or you put a big down payment or things like that. It's not going to break. You're going to keep what you have. So I would focus on, I mean, I would definitely get into something like that that's robust. That's where you can store your wealth. So store your wealth in a robust way. In other words, if interest rates double or triple, don't get wiped out. If the market drops 30%, make sure you're not wiped out. If utility prices double, and maybe if you're paying utilities for your tenants, then that's not a good thing. So make sure you're not wiped out if that happens. So make sure that whatever parameter goes up or down, you're not wiped out. Then you're robust. The third thing is anti-fragile. And this is what I love, because anti-fragile is where you put yourself in a situation where you cannot get hurt. You can only gain more. And that's what wholesaling actually is. A lot of people don't understand that, because when you're wholesaling, you're basically buying options for super, super low prices. And once in a while, it just explodes. And I've had experience with that outside of real estate as well. And it's something that I really like, because if you lose, you're not really gonna lose a lot. If you win a lot. So why is
win
wholesaling?
big.
You win big, because why is wholesaling like that? Well, if you have a good marketing system, you might get a deal for $100, $200, right? Well, if I give that a shock, and let's say the deal was 10,000, if I give that a shock, right, then the deal might be gone. But you're not going to break the bank because it's $100. Like, you're not going to be wiped out because of $100. But let's say in the other direction, I give it another shock, and this time it's not going to hurt you, but it's going to help you. Maybe the $100 is not going to be 10,000. Maybe you got a really good deal. It's now 40,000. So that's anti-fragile. So my advice would be to people, make sure that you're doing things that are either only robust, only anti-fragile, or a combination of both. And the way that you're robust typically is just don't get yourself into trouble with debt and things like that. So that's the same in any.
So hedge yourself, really hedge yourself against risk. Don't only protect yourself against risk, but hedge to where you've got a lot of upside when things go bad as well, right?
Yeah. I mean, you can keep cash and things like that. There's many ways that you can be robust against, but the problem is we don't know what's going to happen, and so you want to make sure you're prepared if the market gets cut in half. You also want to be prepared if the market doubles or whatever. But just make sure you don't get wiped out, because I think a lot of times people are too much involved with the mathematics of, if I put down less, then my cash on cash is higher and things like that. But in the real world, like, there were people, I'm sure, in 2004 explaining how you should put down less and then you have a higher, and they show the mathematics behind that. But if you get wiped out, all that mathematics doesn't matter. So I think in many ways, not getting wiped out is a better result than a lot of people understand.
Protect your downside.
Protect your downside. Make sure you at least do okay, and then create an upside that can really explode your wealth to the upside. And you can do that in many different ways. You can get a good commercial deal. You can get good wholesale deals or really good flips, but make sure you don't get wiped out, I would say.
So Dimitri, we got just a couple minutes left here, but let's shift gears briefly outside of, necessarily directly real estate. You're a married man. How do you handle the work life, I don't want to say balance, but how do you handle, doing the transaction volume that you're doing while still keeping your wife happy? And, you live a pretty awesome lifestyle. His wife is all over YouTube. She's got a pretty awesome YouTube channel. And how do you keep up with her and all the fun while still getting these deals done?
Well, I think the first thing is, and I'm talking specifically about wholesaling, but I think it also applies with other parts of real estate. So my marketing is 100% automated at this point. I need to do a few things once every month. But the marketing is always there. So the reason why I'm mentioning that is because if you don't make sure that it's always there, then it's not going to be there at one point. When it comes to married life and things like that, my wife is actually super supportive of what I do, and she's happy that I'm, working a lot and things like that, because it's good as a husband if you're providing and working. It's better than not working. So it's important, if you choose your partner, that you choose your partner wisely, and you choose a person that's not going to be angry if you're on a Saturday morning working or something instead of doing whatever. But obviously at the same time, you got to make time for your wife. So we do have like date nights where we go out and we have really quality time. So yeah.
That's awesome. So as we wrap up here, number one, thank you for being on here. I love how Dimitri is so data driven, but yet he still looks at the real world. Like I know some people that are super smart, all brains, like all data, but then they don't look at, the real world in investing as well. So some very tangible tips today that we can take and run with. So thank you for that. And thank you for being on. How can people get a hold of you? And maybe is there something that you could do together? Is there something that if somebody needed, how can they get a hold of you? And number two, what's a value proposition or something that you could either do for them or they could do for you?
Okay, so you can get a hold of me. I'm on Facebook. My name is Dimitri Van Camp, Dimitri, last name Van Camp in 2 words, Vancamp. You can contact me through there. I'll be happy to be your friend if you're also in the business of real estate. In terms of helping, I occasionally do a joint venture deal with someone if they need someone to help them to market a property in Florida. And I also provide consulting if somebody wants to get some more into the specifics about negotiating or marketing or something like that.
Love it. All right. So, hey guys, hope you've gotten a ton of nuggets out of this. Like I have. Dimitri, thank you again for being on. And I'm going to have Dimitri on again. I know he's going to end up being a regular on this show. So I'll check you guys on the next episode.
It was great fun. Thanks for having me.
Thanks for listening. I hope you got out of this as much as I did. I'd really appreciate it if you could leave a 5-star review so we can reach more people. Jump over to mariodattilo.net and find out what else I got going on. Be sure to connect with me on all the socials, and I'll see you on next week's show.